Okay, good morning, traders. Today is Thursday, December 15th. Michael Boutros here for this live intraday strategy webinar on SB Trade Desk. We are just getting the release of the CPI figures for the United States, coming out right in line with expectations. So month on month, 0.2% as expected. Strip out food and energy core coming in at 0.2, year on year 1.7, slight slip on the expected core year-on-year print. We were looking for an uptick to 2.2%. That held at 2.1. Index and initial jobs claims pretty much going to be a scratch for today. So a little bit weaker than expected on core inflation, which is what the Fed's main focus has been. Obviously, we always like to remind everyone that the PCE, the core personal consumption expenditure, is the Fed's preferred gauge of inflation. So we don't want to stress these numbers too much, although largely in line with expectations. Okay, that's pretty much going to call the data for the day. You do get some stuff later on today with the NHAB Housing Market Index. That's at 10 o'clock after the close. But obviously, number one topic on hand is the aftermath of yesterday's FOMC decision. How did you guys do with that? I hope some of you caught some plays. I personally was involved on the dollar CAD. Remember we were talking about that yesterday. That was the only one that worked, is the contingency plan for the dollar strength story. I tried to get a short on dollar yen at those highs before it broke. I took a stop on that. Last night I was in a pound long position, took half that position at break even as well. We'll go over all those dollar crosses today, guys, but you know, the major theme that you want to walk away with, and I highlighted it last night, is this dot plot. The major thing that you want to sort of focus on is that you saw a nice little tightening for the 2017 expectations, distribution a little bit higher with the median ticking above 1.25% for where the FOMC committee sees interest rates into the close of 2017. Also, the longer running interest rate target also tightening up right around 3%. So you had 3 voters last quarter who expected the longer run interest rate expectation to be 2.5%. You're seeing only 1 voter there now, more largely around that 2.75%. So that interest rate expectation is really what shifted stuff. If we take a quick look at Fed Fund futures, you know, we were looking at this and we were noting that really the first expectation for above 50 that will take us into a 1.25 to 1.5 range, which would be 3 cuts, was back in December earlier, okay? Now that's shifted up to November. So November is the first material expectation of a plus 50% chance or more of when we might see a 1.25 to 1.5 spread on the Fed funds rate. And that is a readjustment, a repricing, if you will, of expectations, right? I showed you this chart the previous day. It was really just one expectation, mildly above 50 in December. Now you're seeing that move up. So that's all to say, guys, is that the interest rate slope has accelerated a bit. Here's the Fed dot plot as it pertains to that chart that I showed you early in the week on the update. Okay, you can see that the overnight index swap has tightened up to where the latest value has been. Obviously, the slope is a little bit steeper as far as what the expectation is and the median for 2017 interest rates. And that's really what the market moved on, bottom line, is choking up that expectation that we'll get not 2, but 3 interest rates heading into next year. Realistically, what does this mean for rates? Guys, the FOMC has been notorious for being horrible on their forecasts for interest rates. We came into this year expecting 2 to 3. Just like we're going into next year, we got 1. So take it with a grain of salt on a realistic, holistic basis. From the dollar's point of view, as I said in the update one day earlier, guys, before the pre-FOMC update, there's room, right? There's room for the dollar to reprice and readjust and catch up with where interest rate expectations are. And I think we're seeing that now. And although it wasn't our ideal scenario, it wasn't our base case scenario heading into the FOMC, you can't fight these types of swings. So that said, here's what we're looking at with the dollar index. Here's what we looked like yesterday, and here's what we look like right now. So obviously the main level of resistance and the key invalidation level that we talked about ahead of the FOMC was 101.69, 101.75. You did see that topside break. Initial targets on that break were going to be 102.07, which we took out pretty quick. We closed above it for the session. Keeps the upside bias in play. looking for 102.55, 102.60, which was that median line, and the 1618 extension of the entire ascent off the low that we made for the year. Boom, boom, boom. Came in at 103.21. Today's high so far, 103.22. All right. So again, I don't want to get too excited. I don't want to fight this dollar rally, but it's at near-term resistance. Okay. Above here, guys, I really need to do some homework. I don't have anything to that upper parallel. By the way, this is the same slope. I just threw this on there yesterday. The same slope. All of this is derived off the basic trendline support from May and August. Take a parallel, really nice plays. Take a parallel, really nice plays. Take another parallel, call it the exact highs. But that's not till way up here. Okay, so we'll have to do some more research here on the dollar index to kind of find some new levels, but as of now, 103.21 is the level to beat on the upside for further topside in the index. I do think you have more upside in the dollar. It's just whether you go straight from here or not. On the near term, keep in mind you're still marking some divergence with this advance. Price action making a higher high. The oscillator making a lower high. One of the reference points sub 70. One of the reference points above 70. Certainly the risk is still there. Okay. Here's the near-term chart looks like. Here's that pitchfork that we added on. Let me bring this into a 4-hour chart. And you can see clear invalidation of the break of the upper parallel and the monthly open. Okay, so at this point, this is null and void. Dollar index at risk while below 103.22. A topside break there. Really just look for the 104 handle, but we'll have to scope out some new levels for the index. Any question on the dollar? Price action, the FOMC, implications for the FOMC, how the market reacted? Feel free to throw out any questions you have, guys. It was a very interesting day. It was difficult to trade if you weren't in the position. The only trade that worked out, like I said, I'll go over all my positioning. The only trade that worked out for me was dollar CAD. And like I said, yesterday we did take a little bite out of sterling, but you know, all the invalidation levels broke. And that's the one important thing that we want to always press upon, guys. We go into the market with an opinion, with a clear directional bias that we have. We favored an exhaustion trade in the DXY. Once we broke through that near-term resistance at 101.75, that got invalidated. Okay, so you look for that stretch higher here into resistance at 103.21. All right, so let's jump into sort of the more operable setups here at this point. Here's what dollar CAD looked like last night, and here's what dollar CAD looks like now. It's interesting because dollar CAD was, if you had no idea the FOMC was coming, it was a picture-perfect technical play. I'll bring your attention again to 103.79, 103.80 level. We talked about this, you know, ever since the start of the week. Here's the 13th. We even had it on the update for the 11th. Let me go back to that one. Okay, and just show you the daily chart. Here's what it looked like back on the 11th. We were looking for this 103.79 barrier to be sort of the critical region of support. You had the 200-day moving average in green, key 618 retracement. Remember a couple of days ago we added this parallel here in the webinars. You had the lower parallel and basic trendline support all lined up right there. The market literally took a dip right into that region and then ripped right through on the FOMC. So for me, it was worth a stab to take it ahead of the FOMC. Again, I lightened up the position to just a quarter heading into the release, and the limits were up at 32.20. And once we got 32.20, we got taken out. But here's what the intraday chart looked like. Look at that. Picture perfect. And here's what we looked like last night. So the rally really ripped, took out 103.30. That was our last target. Again, my target was just inside that, 103.27 or 25, something like that. And this was the key resistance I was looking at yesterday that we were breaking through. And as I noted in the report, if this breach is legit, we'd want to look for support to hold around 133.90. Basic breach of resistance, zoom and retest that support, and move higher. It's exactly what you got in overnight. The pullback got a little bit deeper, as deep as 32.77, 32.75, but that held on the upside stretch. If you're holding longs, you're now looking for 133.67 133.75 is near-term resistance. This was a big level near term though. Yeah, the upper median line parallel of this formation, okay? You had basic channel support, former channel support, now resistance. And if you look to the left there, you had a really nice pivot range. Some swing highs, some swing lows, all got invalidated with this break. You're looking for 33.75 on this stretch. Now, interestingly enough, you're seeing crude prices also continue to slope lower after breaking that key support region that we talked about yesterday in the webinar. Not surprising to see some weakness in crude prices, giving dollar CAD a little bit more legs on the upside. Are you waiting then for a pullback now for new longs on dollar CAD? Eileen, heading from this point forward, I'm not looking to take any new long dollar exposure. That's just for me personally today. You know, I was caught off guard with the severity and the sheer magnitude of the dollar rally. Obviously, most of the dollar crosses placed and made outside day reversals off of the lows or highs in their respective pairs, Eileen. So I can't get excited about buying at the high, and at the same time, we're not at resistance level where I can start to really start to fade this. Although the dollar index is showing that with that perfect tag of that 1618 extension, we need some more evidence in near-term price action before we can start to fade it. So we're just waiting then to wait, for it all to sort out and see where the new levels would be. I want the dust to settle, Eileen. If you're holding long dollar exposure now, you want to be chipping away at these next upcoming levels. If you're trying to enter new positioning, Eileen, yeah, I need some more. I need to wait for the dust to settle here a little bit. Makes sense, says Eileen. All right, cool. Where did you place your stop in dollar CAD yesterday? I don't think the dollar CAD arrows will still be there. No, it was last night, right? Yeah. So it was basically on a dip and a rip. So this last dip that took us into 30.80. Okay, you see how momentum failed at 60. This is exactly what I was looking at yesterday. Let me bring it up on the chart here and kind of walk you through the rationale. Sorry. Okay. You see here? Okay, 10:30 or so, you had that dip into 130.80 right around this region. So momentum failed at 60 on the 5-minute chart, but on the pullback, you saw this hold essentially 40 as support. Here in price, it's going to keep clicking over, but here in price, the rebound saw a 60 break. It even made it through 40, through 70 on the upside, and on the pullback it held 40. So this was actually the entry right around 131.13 with a stop against the low. And then, like I said, as soon as I got 23 pips, I took some of that off. I took off the rest, another half of the trade. I took off initial quarter at 23, took off another half of the trade ahead of the FOMC. And then there was a limit set at 32.20, just below 32.30, which got taken out on this stretch here. Obviously, again, hindsight's 2020. I could have held that position for a little bit longer. Didn't expect the dollar rally to rip this hard. Could I have put that limit to leave a little bit on the table? Sure. Would that have been a prudent move to do? Sure. Did I play it a little more closer to the chest because it was a big FOMC announcement? Can't begrudge me some of that. Or can't begrudge me some protection. So on a trade like this where you're coming into key support, my answer to your question, Conwall, is on a trade like this when you're coming into key support, you're always going to look for the dip, test, and then the retest and failure. On the pullback, it was a pitiful pullback, but it didn't get much. And then again, like I said, on the momentum signature on the near term, on the really near term, the 1 minute, momentum came right into 50 and held. So it was a pretty good candle construction as well, even if you look at this from a 30-minute. Nice long wicks right into that low. I remember I was looking at the hourly. That looked like it almost, or was it the 2 hour? Well, I guess it was the 4. Made that outside reversal candle right off the lows. So even after that post break, the close back above near-term resistance on an outside reversal candle for the 4 hour really kept the upside focus in play. Again, near-term resistance 133.75, 67 now on this stretch. One thing I was looking at last night that I just want to bring to your attention as well, guys, if you tack on a quick retracement, the levels we have mapped out have been more effective as far as what price has been doing. But I don't want to ignore the main key levels of the retracement. The 618 comes in just higher. So I just wanted to highlight that for you as well, 133.94. Okay, I would still be looking to shave it off at 33.67, 33.75 here. Here's a 2 hour again. Conwall, does that make sense? You want to wait for the rebound, zoom, and retest. It's always going to be a stop against the lows or some sort of major key region. And it worked out perfectly because the low was right at that 618. So, a tight stop on a move like that would work. Or worked out pretty well yesterday, rather. So that was dollar CAD. This number 2. Dollar index was number 1. Fed coverage. Number 3 is sterling. Any questions on the dollar CAD before I move off? Okay, we can do a quick segue to crude. Let's do crude as number 3 here, and then we'll come back to sterling. Okay, so going forward, short at 33.75. So Pete, good question. 33, and this is something that, it's funny because we're writing our mistakes of the year and trading lessons and all this stuff, reports that we publish for end of year over on Daily FX. And one of the things I was talking about is just because your targeted resistance is 33.75 doesn't mean that's what you want to go short at. Okay? Think about all these levels that we were targeting last night on these longs. If you had tried to short at each one of these levels, it would have been a painful trade last night. So no, I don't necessarily want to be looking for a short. I want to be looking for resistance. Doesn't necessarily mean it's going to come kick back off 33.75. It could just rally into 33.75 and sit there for, a couple of days like we did here. It could do a lot of things. I'll be looking for exhaustion. Okay, the dollar index tagged resistance. Keep in mind, CAD is not included in the ICE dollar index, but nonetheless, the dollar is finding some level of significance to the upside. So if we find a near-term trigger, counter trend trade, quarter leverage, sure, Pete, it might be an opportunity. But I would need to see some compelling near-term price action telling me that we're seeing a turnover. That being said, this is a breakout, pure and simple, my friend. I'd rather be looking for the pullback, like we noted last night, to get back on the long position, necessarily than looking to fight every resistance target. Does that make sense? Says, great, thanks. Hey, more than welcome, Pete. Good question. I get that a lot, especially when I say, oh, here's upcoming resistance, or yesterday when I tweeted on the dollar index, hey, we're testing the yearly highs. I got a million tweets that were like, short. Well, that's not necessarily what you want to do. Resistance is made to be broken. What I do that is to highlight, if you're holding longs, these are areas of which you want to be mindful of. And you want to be cognizant, looking at near-term price action for seeing, signs of near-term exhaustion in momentum. But right now, I'll be looking for a reaction near 33.75 on a stretch, 33.94 into the U.S. trade session. Okay, that's dollar CAD. Crude. Here's what crude looks like, Conwall. So we broke that key level of support that we talked about yesterday. Remember the broader picture here for the daily chart. Okay, hasn't changed. There's really nothing too compelling to talk about here. It's really the near-term price action we've been following off the high that has been most fruitful. So if you remember, Conwall, yesterday we talked about this region 51.60 to 51.64. Even during the course of this webinar, we highlighted 51, right, as an exact 200 or 100% two equal legs down. And sort of a last-ditch effort region of which this thing should find some support if it's going to hold this formation. Downside break, checked it as resistance roughly, pushed off. I'm looking for a stretch into 49.63 as near-term support for crude. And that sort of fits Conwall with a little bit of a push higher in dollar CAD, right? So dollar CAD can make that stretch into that near-term resistance target before turning over. Look for 33.67, 33.75 on dollar CAD. Look for 49.60 here near term on crude. Comwall, make sense? Michael, I want to make long-term position in crude. Any idea? Well, what's your opinion? You tell me what kind of duration. Long-term to you is different from long-term to me. A week is long-term to me, man. You say long-term to Jamie, you could sit in a position for a month on end. Everyone's got a different time horizon. Okay, so you're looking for about a month. Here's the thing I want to say when people come up to me with questions like that, Conwall. I don't mean to single you out, but just to put things in perspective, it doesn't matter what your time horizon is and what position you want to take as far as a long-term or short-term. The market's got to be positioned for it, man. You got to be at a major key inflection point. You got to be near a nice support, near nice resistance level to take that long-term stance. I can tell you that from here, I do see crude prices lower. Okay, we saw some divergence into that last high, false break above the yearly highs and a reversal. This week will, in fact, I shouldn't get too ahead of myself, but if we bring this into a weekly chart, this will, in fact, make a outside weekly reversal, okay, or not a reversal, but an outside weekly candle if we break those lows from last week, which we're upcoming on now. And does that line up with that low right there? Hey, look at that. Not bad. That's all to say, from here, I could see a drop all the way as deep as 46 again. Just my humble opinion. Not really my game, though, Conwall. I don't want to steer you in the wrong direction, man. You guys want to use us for our strengths. My strength is definitely more of the near-term price action, intra-week, intra-day. I typically don't have the patience to hold these positions for months and months on end. But I can tell you that from here, it's pretty convincing near term that you're likely to see some further weakness. The broader story remains constructive, in my humble opinion. But from here, you certainly do have some downside risk on crude. Not to mention, strength in the dollar, if it does persist, is only going to really curb the upside here. It's going to limit the ability for crude prices to really make any meaningful advances. If you look at the data that we've been getting over the last just over last week or so, there was a build on some sectors, there was a draw in some sectors, so it's kind of leveling it off, and it's been all over the place. Price action, though, from a price action standpoint, 48.88, 48.90, pretty big near-term target. The monthly open, a basic, I'm lying, that 236 needs to be adjusted. It's probably going to end up being a 38.2, yep. Basic 38.2 retracement. Former 100% extension from the highs, this whole region right here. Okay, sorry guys, just looking to see if we have any slope. Yeah, I'd still be looking low right now. Look for immediate support at 49.60 right here on that 1618, but this is a big, big, big region. Big region. All right, Conwall. Don't forget, Jamie will be on board later today, guys, with the Midweek Strategy webinar at 12 p.m. Eastern here in New York. So definitely keep your long-term questions and your broader scope picture sort of outlook questions on hand for that later today. But you got me really interested in this, Conwall, as far as near-term price action is concerned, and even the broader picture. the possibilities. I really wouldn't get too aggressive on anything for the short side until we get through that 48.90, 48.70 barrier. Thank you for your guidance. Always helpful. And you're more than welcome, Kamal. Always a pleasure having you in the room. Horace, dollar yen. I don't want to answer that question carte blanche. I'm going to get to that in a moment, okay? Let me get to sterling first, and I promise I'll jump into dollar yen. So sterling, number 4, here's what the British pound looked like. Here's another one that I was involved in yesterday. British pound, where art thou? Here we go. Okay. Oh, good old sterling. So here's what the pound looked like last night. I do want to just really quick go to what we were looking at earlier in the week. So here's what the update looked like on the 12th, right? This is basically the open of the week. We were looking for that near-term resistance in in sterling near 26.88, 26.95 was the level of near-term bearish invalidation. We danced above it, okay, kind of probed through, was kind of messy. I was telling you guys yesterday I wasn't really happy with the way this was performing near the upper parallel, but the risk remained for a stretch into 27.67, and then we were looking to short that for a final drop into this key region. Okay, that was the target early in the week. I in fact was looking for a drop here first before the rally. We got the rally, then we got the drop. But point being, from that, here's what it looked like yesterday. And heading into the Asia session, all I did was say, look, it's at support. You got the monthly open. You got the 100% extension. You got a 38.2 retracement. You got basic trendline support off the October low, all right here. It was worth a shot for me. I took the long position on a near-term scalp trigger, or a momentum trigger rather. The quarter ATR was 30. I think I booked somewhere like 24 pips or 22 pips. I put the stop at break even. I left the limit up just above. Unfortunately, the weekly open didn't get triggered on that rally before it reversed and took the rest of my trade out. So even on a rebound play here, I squeezed something out of it, but it wasn't anything to write home about. Here's what it looks like now. Just give you a little background. 21 pips is what we booked on it. So here was the entry. Okay, some really nice divergence. Price action, lower low. Price action, lower low. Lower low on a close basis. No spikes. Higher low. Much more dramatic higher low. Okay. Entry with a very tight stop against what was the next downside target, which was 25. So it's basically working with, basically like a 15 pip stop loss. Again, as this thing came up, you see some teetering. Momentum stalled exactly at 60. So I took some off the table, went to bed, called it a night. And again, that limit was literally just above the weekly open. I kind of just missed it before coming off. Long story short, the break lower here still has me looking lower in sterling. Okay, here's the risk, guys. Let me take that back. Here's the risk. The low day close for the year comes in at 24.33. That's the October close. That's not the Brexit drop-off. The Brexit drop-off is way off from here. The low day close for the year actually came right here on October 7th, and that's 24.33. It's kind of exactly or just ahead of where we turned right now. The 50% retracement of the near-term advance off the lows also is exactly 24.32. So I think you could see a little bit of a rebound here near term. At the end of the day, you still want to stay bearish below that basic trendline support off the October lows. So even if it rebounds from here, a zoom and retest of former support as resistance, and you'd look for another move down. Next downside target beyond 24.30 is going to be that 23.50 marker into 23.58. Key 618 retracement, key 1618 extension. 25 was a big level, guys. In fact, if you guys remember the update, I'll show you a cool little trick. I was looking at this yesterday, and the update from earlier in the week. Remember this 100% extension? You know that was derived from at 24.99? That was this extension right here. Boom, 100%, 2 equal legs down. Well, when we redid our levels last night, this retreat extension, taking the larger scope, is exactly at the same level. So it's pretty big and should offer some near-term resistance here on an upside swing. Any questions on sterling? Sterling waiting for new shorts, rebounds to 25 then. Yeah, I'd be looking for 25. Honestly, if we could get a spike towards that median line or towards that former trendline support that we broke, that would be cool. But yeah, essentially into 25, let's call it 25.20, that entire zone there is where I'd start to look for some near-term resistance, possible short triggers for a stretch into 24.30. Also, I've been looking, I don't have anything for conviction yet, but I'm looking for some new structure. I want to get some structure to this decline. You know what I mean, Eileen? It's always going to be the most beneficial way to trade these. But I just haven't found anything that's too convincing. I was looking at this earlier today. It could be catching the lows, but even if it does, look where that median line comes in. Just higher, 25.30 even. Okay, and that would coincide with the lows from here. So this is what I want to say. I don't want to stress this 100% extension anymore. Let's redo this. We'll put a soft target here at the lows from last week. That's your new resistance zone. That's the target with a break to the downside. Look for initial resistance 25 into 25.13. I'd say bearish invalidation for the immediate downside bias would actually be at 25.50, the lows from here. It would have to break through last week's low, would have to break through the median line. Also, that former trendline support off the October lows, all of them stack up here. So yeah, rallying to this basic region would sort of be the first levels I'd look for initial resistance and possible reentry for the short side. One other thing I do want to take into account is just the weekly range. Bear with me one moment here. It's too early to tell. I have no way if this is a medium term or a real concerted low, but we do get a fib level right there, 38.2 at 25.50. Pretty clean. Pretty clean. Here's the 1 hour. Feel free to take a snapshot, guys. I do see some new names here in the room, so just a quick reminder, guys, you can always click on the camera button in the top right-hand corner of your GoToWebinar screen and take a snapshot of any of the charts you see presented here. So if you do need to refer to those throughout the course of the day, you can feel free to do so. Sterling, I keep trying to eyeball structures from after the October to see what is lining up after that flash crash. On longer term, yeah, I mean, the only thing I was working with was this channel that would seem to be breaking right now. This was a big resistance level. Remember, guys, we turned bearish, early in the month. It's just that I was expecting this support, the monthly open, channel support, all of this to give us more of a concerted floor. But as long as you're below that, the risk does remain lower. It says no in general. Yeah, it's been tough. I don't blame you. It's been tough. It's climbing up there as far as getting on my abomination list. I mean, it's nowhere near dollar yen, but it's getting there. All right. Any questions on British pound? Obviously, the BOE held interest rates as expected, pretty much more of the same from the MPC earlier today. Just looking at the headlines, I really didn't even see anything kind of popping out at me, guys. So steady as she goes. Steady as she goes. All right, let's jump into dollar yen. That's going to be number 5. Here's what dollar yen looks like. So dollar yen, I got caught on this doing what I tell you guys always not to do, and that's basically trying to call the turn. I couldn't really believe that we're going to continue to break through despite all the technical factors that were lined up at 116, 115.50. You know, we talked about this region for some time. Shorts worked out great earlier this week, right off that mark. We just couldn't get any downside play to it, and it held above the monthly open. Once it broke through 116, I should have been, that was our marker. That was in fact what we had highlighted as our near-term bearish invalidation level. Um, I was stubborn. I continued to try to fade the breakout here, and I paid a price on it. So long story short, near-term resistance targets on the way up were 118.10. That got taken out last night. Next topside target really isn't until 119.40. I cited 119 last night on the report just as a soft target, guys, because these big figures in dollar yen can tend to sometimes be just psychological figures that you see tags of, just like you did at 116 earlier this week. Now, obviously, 116 for us wasn't just a whole number. That was a very nice swing low from back here in August. This whole region was a very big pivot zone for dollar yen that we've been watching, and certainly the break above does change things. So to go back to your question, Horace, can you have a look at dollar yen seeing some short-term reversal? I want to be very cautious. And again, for those of you who've been with me for a couple of years, there's a reason I call this the abominations, because this is the kind of trade strategy, or this is the kind of price action that rips people apart. And I learned that the hard way early in my career. When I talk about dollar yen and why I hate this thing, or why I tend to make fun of it so much, is because I was this guy back in the day. Where was it? Right here. It was 2000, 2003. Right here. I was this guy who was fighting this entire decline. Okay, this was early on, the early 2000s. Dollar yen was tanking from 125. What? 125 to 120? That's insane. Oh no! Now we're looking at 115. That's a multi-year low that can't break. And I was so wrapped up with just getting all excited about learning the markets and getting my hands much more in depth on the trade desk that I got excuse my French, I got my ass handed to me on that. So don't underestimate dollar yen. Okay, this thing can really, once a directional pattern or once a directional break has been made, the potential for the runs are there. It gives very few pullbacks. And if you get caught trying to fade this thing in the wrong spot without proper risk management, you could really get hurt. Long story short, it hit the first target at 118. I personally think, I'm not really interested necessarily in taking short exposure at all, Horace. Even on some short-term reversal, I'd be looking for some support on the pullback to get back long. The only thing that would turn me back bearish would be a move sub 116 again, specifically 115.50. I know that doesn't offer you guys much help, but I have to tell it the way it is. I can't say, oh, well, it could top here. You might want to try getting cute with a short from here. No, it's dollar yen. It's going to rip your face off. If it's chosen a direction, don't stand in its way. That's what I got to say about that. And you're talking to a guy who wanted to be short. Kamal says dollar yen is a ghost. It will swallow you whole. I like that. I like that. But in all seriousness, guys, it's not the best idea to try to fight these trends. If you take a bazooka, a gun to my head right now, I would say, you know what, this is probably going to rip right back into 116. Am I willing to put money on it? No. Here's what near-term price action looks like. Nice little high bar there. Again, a break below 70 would be some near-term exhaustion. Even on that pullback play, look for initial support right along former resistance. 115.50 is what would shift my focus lower. Okay, it's the weekly open. That key 618 retracement would necessitate a break back below 116 in that key pivot zone that we talked about on the daily chart. And this break below here is what would put me a little bit more on the corrective play, as it were, for dollar yen. As it stands now, You're just going to try to call a high like I did last night and get ripped up again. So, and remember, especially when you're looking at these near-term uh, momentum oscillators, as long as something's in overbought condition, the propensity for it to continue ripping is there. It's the break back below 70 that would be the signal. So if we take a look back at the hourly chart, it looks like that just broke back below 70 right now. A 30-minute chart broke back way earlier today. Does suggest, yes, that you could see some further near-term weakness. That weakness, you'd look for some support into 116 for a possible entry on the long side. Here's what dollar yen looks like near term. And even the near term picture actually does look like you're seeing momentum start to sink. Here's your first break sub 40 that you've seen here on the 5-minute chart since pre-FOMC. Here's a rally into the U.S. Open for the futures markets. Exact hold at 60. That's pretty bearish. Break sub 40. So yeah, I do think if you push a little higher and you fail at the U.S. opening range high, that might be an exhaustion trade to the downside. But from a conviction bias, you need to get below 116 to get bearish. Anything you take on that, guys, again, quarter leverage, whatever your typical trade size is, just really tone it down heading into the end of the week. Let the dust settle here on some of these yen crosses. Questions on dollar yen? Maybe new longs from here on dollar yen if it holds into the U.S. Open. Says there's divergence on the 1-minute chart. Okay, so I don't see divergence on the 1-minute chart, Eileen. Remember, I think you're looking at the wicks. Keep your eyes on the close. There's no lower close beyond here, right? So this is not actually divergence. Always do this, just to make sure you're not faking yourself out. Ooh, I do not know who uses those high-low charts. There we go. Right? So it's a series of higher highs on both sides. Yeah, so you don't want to look at wicks, right? It's all about the close of each candle. So you don't want to get faked out like that with divergence. Okay, moving right along. Last questions, dollar yen, going once, going twice, sold. Let's go to number 6, will be Aussie dollar. I do want to cover sterling yen because I think that's an interesting play too at this point, but let me just get through the dollar pairs first. Here's what Aussie looks like. Aussie employment data yesterday was slightly mixed. Okay, you had a better than expected print on the employment change, but you did see unemployment uptick to 5.7%. So here's what it looks like on the Aussie. Let me just back this up real quick. Here's what the Aussie data looked like last night. Okay, we were looking for an employment change of 17.5 thousand. It actually came in at 39.1, an upward revision. But you did see the unemployment rate uptick to 5.6%. The reason that that's not necessarily going to be a bad thing is because you saw the participation rate also uptick from 64.4 to 64.6. So whenever we see participation rate uptick, that'll tend to put artificial upward pressure on the unemployment rate. More people returning to the labor force, is going to improve, broader participation. But the more people you count, obviously, it's going to give that bend to the unemployment rate. So keep that in mind. Also, full-time employment was a nice little pop higher at 39.3 thousand. You even got an upward revision. So the employment, data was mixed. The unemployment upticking and all this. Long story short, the initial reaction did see a little bit of a higher tick in Aussie initially, did turn over pretty abruptly again ahead of the near-term resistance level, also the weekly open, 74.45 that we noted last night. So the move lower, 73.82, has been taken out. Again, on a rally, that's still the same level to beat, and now near-term resistance, also from a slope confluence. So basic trendline support, the median line off the highs, that's this one right here, and the weekly open all line up right around 74.45 as near-term resistance in Aussie dollar. Let me clean this up. Opa. Okay, this low has been taken out. So at this point, this extension has no bearing. A new low has been registered. Now, if this were to be a more material low, we would take this reference point, take it to the new high, and move this reference point to the new low. I don't know this is a low. So at this point, this extension has no bearing. That's got no bearing. This 100 also has been spent, but I'm going to leave that 75 level there for now. There's been a pretty major pivot in price, even on the daily chart here, catching some major highs and some major lows. So for Aussie, moving forward into the close of the week, again, you're risking near-term rally here just on account of, I wouldn't say that's really strong divergence, but it is there with the momentum oscillator holding those same lows. See if there's anything on the near-term charts here. Some divergence, nothing to write home about on the 1 minute, but nothing really too compelling just yet. Long story short, I'm looking for a near-term recovery to get back on the short side. I think you get a stretch into 73.30, 73.27. It's the next downside. Key levels of confluence be here, followed by obviously the yearly open, which converges on a 786 retracement at 72.80, 72.82. Okay, here's what the daily chart looks like on Aussie. So here's your initial downside target right here. It's a 50% retracement of the 2016 range. Also the 50 line of the current operative descending formation. And again, the yearly open and the key 618 converges over the next few days, and it's accelerated, but that would be the lower parallel. What's interesting is a lot of these pairs are basically turning the whole year into a doji. I don't know if you noticed yesterday, okay, here's a question. If Aussie doesn't get all the way back to 74.40, where else would you look for new shorts? Well, you could get exhaustion anywhere before that. Like I said, I don't want to fight the dollar rally. You could get exhaustion anywhere before that. So I don't want to take a long here, but if we get some sort of basing and a near-term break higher into U.S. trade, Eileen, take a look at this retracement. 38.2 comes in pretty nicely with those lows from last week. That's at 74.25. The 50 is exactly at 74.40. I'm going to just show you there. I'm not going to leave this retracement. I'm just going to show you that. But these are initial areas I'd look. And this would be decent because you could take it against that swing high post FOMC as far as your stop is concerned. But you're inevitably, I think, looking for that stretch into 73.30 still. So we're in the process of writing our trade opportunities of the year as well. I'll give you guys a sneak peek. Obviously, you get the cream of the crop here. Here was last year's link. This is a Daily FX article I published for free on Daily FX, guys, highlighting the Aussie Yen. And the basic setup I'm sorry, guys. Bear with me one moment. Aussie dollar, where is that 100% fib extension from on the 2 hour? This one? This is off the lows. Like I said, I want to keep it not necessarily because of the significance of the extension, but because the 75 handle has been very rock solid as resistance, although this week was kind of messy. But even if you take it out into the daily chart, Eileen, pretty big level. So in and of itself, 75 I'm looking at. I don't care that's 100% extension. I'm just leaving it there to mark that key region of resistance. Support, resistance, support, resistance. Make sense? But I wanted to bring your attention to Aussie Yen. So I sent over the link in the box right now just so you can follow along if you want. But Aussie Yen is, it came off of a really big region today. It made a complete full round trip. Here's your yearly open. You sunk down as deep as that key support structure at 72.33. And what a rebound it's made. I want to show you the weekly chart, which has been what the focus has been for us. So a quick look at what this thing looked like last year. Here's what it looked like heading into the start of this year. We were checking near-term resistance at the upper parallel after making a rebound off this lower parallel early in the year. Momentum was pretty bearish. We had just dipped into oversold territory, but we were looking for a new opportunity to sell this early in the year, ultimately looking for a drop into 72.15, 74.22. Now, I'm not just showing this to you to gloat. I'm showing this to you because what essentially happened is we started the year, dropped into that support. Now we've paired that whole decline, and we're basically at a doji for the year. Yearly dojis. It's always an interesting thing. But my point being, Aussie Yen is at a huge barrier of resistance as well. Okay, that barrier of resistance is defined by not only the yearly open, but the 50% retracement of the entire decline off the 2014 highs. It's also the median line for the current operative structure that we highlighted off the lows here. So that median line comes right in line. If you take that same slope, it's the exact lows that we made off the year. So I'm liking this setup a lot. Another parallel from here keeps it going. Probably if even a spike high right now towards 88.60 wouldn't be outside the realm of possibility. My point being, guys, is that you're coming into a near-term exhaustion, congestion zone, whatever you want to call it. Looking back in price, you can see some really pretentious price action down here, contentious price action, I should say. So watch for exhaustion near term on Aussie Yen to the upside. You're now working on your 6th consecutive week of rallies. For Aussie Yen, not necessarily the most obscene thing, but certainly coming in some levels of which you'd want to be cautious about continuing to favor the long side. A pullback, this is a weekly chart, so a little bit longer term. I'm just giving you guys kind of a preview as I write this. I'll be wrapping this up for Daily FX sometime over the next couple of days, but basically you're looking early in the year for a pullback near that median line. The broader trade remains constructive longer term while above 81.97. Essentially your bearish or your bullish invalidation levels all the way down here at 79.10. So heading into next year, again, the broader picture still sees a little bit more of an upside play here for Aussie Yen. Immediately, the advance is at risk sub 87.64. So with that in perspective, right, it kind of puts some color to where we are on Aussie Yen on the near term, on Aussie Dollar on the near term, with the fact that this reversal and break lower could really be a material shift to downside targets that we were looking at earlier. And to Dollar Yen, although I said earlier I don't want to start fighting this yet, the possibility of this stretch finding some near-term resistance at one of these targets, seeing some yen strength, giving us that downside move in Aussie Yen. And the near-term pullback we're looking for. So trying to fit the puzzle pieces together here. Just wanted to give you guys some perspective on where we were on these, but some opportunities that we'll be looking at heading into the start of 2017 trade. Any questions on Aussie Dollar, Aussie Yen? That was number 7. I see a question here on Kiwi CAD. Kiwi CAD, let's take a look. That'll be number 8. Kiwi CAD. Ooh. Let's see. Oh, this guy. Yeah. Guess what? Kiwi CAD is still playing that same slope. Wow. Geez, look at that. I haven't updated this since the start of the week, obviously, but look at that lower slope, caught the lows. We talked about this early on the rally. Looking higher. I was looking for a rally towards 95.65, 95.60. Looks like it failed at former slope support, now resistance. Yeah, I think you want to be cautious here. I still think you get the rally towards 95.60 personally, in my humble opinion. Maybe if not quite that high, um, towards the monthly open at least. And the reason I say that is just because the way price action has responded to this critical near-term support region at 94.22 slash 94.33. 94.33, of course, being the 2016 open, 94.23 being a basic 38.2 retracement, and the lows that we made for last month. Obviously, you've seen a lot of wicks into that region. We did get one singular daily close below. You gapped open, filled that gap into the weekly open, and held it as support on a rebound here broadly. So I still do think you get a pop higher and then a move ultimately lower. Longer story, I still do like this correction taking another leg. Near term, I do think you have to respect a little bit more of a possibility for a pop higher here in Kiwi CAD. Although I have no really strong opinion on Kiwi in general. Okay, I have Kiwi at support right now. Here's the 50 line. Here's the 200-day moving average. We did probe below it earlier today, but we're sitting right there to open up the U.S. trade session at that confluence support. So I don't really have a very strong opinion, although the only thing I do like about Kiwi is where it turned. Okay, so here's your median line. A little bit messy on the upstretch, but again, you had some pretty major event risks, so you got to give that thing some room. Exact 618 retracement caught the highs precisely at 72.37, and then an outside day reversal yesterday puts the focus lower. You're at near-term support, so you could see a rebound here. That would coincide with the Kiwi CAD rebound I'm looking at, specifically further CAD weakness, a little bit of a Kiwi relief, as it were, and then a move lower. So where that puts Kiwi CAD, I guess, is going to be more determined for me on whether the CAD continues higher. That is dollar CAD weakness or not. Does that help, Horace? Or who was that question for on Kiwi CAD? I wish I had more of a definitive bias for you. The only thing I can tell you for Kiwi CAD is that that setup that we were following remains constant. So I still like that slope on the near term. I still like this thing. Bring it to a 4-hour. This slope has been working very well. Support, 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 support. Next topside slope still takes you into that region at 95.60. All right. In fact, just off this near-term advance, let me see if that comes up. Ha! Look at that. 95.67, 95.60. Even better. Two equal legs up, simple correction, would still take you up into that 95.60 region. Michael, do not forget commodities. How could I, Conwall? So we did cover crude, right? Excuse me. Goodness, excuse me one moment, guys. So, gold. What did we say and what did we like about gold? Downside was still the game plan. We're coming into that key region of support, 1120, 1130. You guys heard me talk about it ad nauseum ever since essentially September. That is a big, really can't stress it, key region near term for me that I'm watching. So I'll bring your attention to a couple of different things. It's the basic 2014 low. Let me take this back to the weekly charts. Here's what gold looks like on the weekly chart. Okay, this was the quarterly forecast provided for Q4. The last downside target is what we're checking right now. That's 1120 into 1130. Into 1130. 1130 being the 2014 low. This is a weekly chart, so each one of these breaks, guys, represents the yearly open. Okay, so there's your 2014 low. There's your 764 retracement of the advance off the low. There's a 1618 extension of the decline off the highs. And there's basic slope. Slope resistance, take a parallel. Resistance, support, break, take a parallel. support, support, support. So for gold, the immediate downside target's at risk, or the immediate downside bias is at risk heading into 1120. Bullish or broader bullish invalidation for the broader trend, okay, is still with the lower parallel. So even if you get a dip into 1092, I don't want to play shorts here by any means, but that's what would put my focus way down. I mean, we'd be looking for fresh new targets to the downside on gold if we do break this level. Near term, I'm looking for exhaustion. Weekly momentum right into the 30 level. Right into the 30 level. So any way you slice it, I'm a happy guy. I've been looking for this target for a very long time. Caught a lot of heat for being so bearish early in the quarter, but here we are. On the near-term charts, again, going back to the daily, this thing is still way oversold condition, so I do not want to start fading it yet. But I am looking, like I said, for signs of exhaustion into 1120. That's the sort of risk here for gold moving forward. All right, even on the near-term charts, there's really nothing to look at here right now as far as a near-term objective play. I want to get a dip into 1120. I want to see some exhaustion. I want to see a recovery in momentum, and I want to take a stop against that low, whatever that low materializes into being. Okay. Questions on gold prices? Couldn't be clear. Coming into a critical support barrier, 1120, 1130. Okay, silver looks like this. Not quite as critical a support barrier, but I do think you can get a little bit deeper here. So the actual slope, it's been kind of contentious. I could see it traveling a little bit lower. The 1618 extension of the broader decline still comes in at 1570. So that rally that we were talking about, remember, Conwell, I thought we were going to see, or I was looking for a spike higher into 1740 for a short. You never really got it. The high that you got, well, the high for the week was only 1723, but the high yesterday was 1720. The break back below the weekly open, the lower parallel, shifted the focus lower. You're looking for 1578, 1570 as the next near-term downside support target here in silver prices. Near-term resistance, look right back at the monthly open, the former 618 retracement. That gives you 1650, 1646. All right. Questions on any of the commodities? Eileen says, what's your schedule to the end of the year? So guys, I'm going to update you on over the weekend with the schedule for the webinar for the next 2 weeks. Honestly, I don't want to waste your time and I don't want to waste mine, so it'll really depend on where we close over the next 24 hours. I want to see how the week clears out. If there's pertinent setups and I do see opportunity and I'm involved, we'll definitely run through the webinars. If not, we'll wrap it up there. For sure, Jamie's midweek strategy webinar is on. This is the time of year for Jamie specifically, guys, where there's a lot of real opportunities as far as the swing setups are concerned, some major turns and reversals and the like. So definitely his straight trading strategy tends to be very beneficial heading to the close of the year. So definitely stay tuned for 12 o'clock Eastern later today for that midweek strategy webinar. Again, his webinar will be on tap next week. I'll give you an update on the intraday charts or the intraday webinar schedule on the homepage, guys. So just keep your eye on the SB homepage. And I will update this with the webinar schedule heading into next week. Yeah, God willing, Eileen. Hopefully, we'll see how that happens or how that works. It's been a long process, but it's in the works. Guys, I'm going to wrap it up here. I hope everyone has an awesome weekend. Again, if you missed out on some of the trades or the opportunities from yesterday, or if you got a little bit of a spanking yesterday, either way, brush yourself off. There's going to be plenty of opportunities to come. Don't go chasing anything here, guys. This dollar play is not over, and it's likely to get stop out a lot more people before we're actually going to make the next bigger move. So keep that in mind. Again, Jamie's up at 12. Best of luck trading, and I'll see you next week. Cheers.